Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Wednesday edition. Hope you all enjoyed watching the pomp and circumstance out there in Washington, D.C. as we had what seemed to be a peaceful and amicable transition of power to President Biden. And I'm looking forward to just moving forward past all this election stuff, whatever side of the aisle you're on, or however you feel. Let's just move forward from here on out. We'll talk about the markets today, which obviously we're rejoicing in the Biden inauguration. There were some records broken, not just the all-time highs, but I'll sprinkle on a couple little facts here as we progress through today. Just talking about some of the incredible records that were broken. And again, hello everybody. We got a big group with us, so I love having you all with us. It's going to be interactive, so send in your questions. You can put those down in the chat on our YouTube channel if you're watching this live. If you're not watching this live, click that subscribe button and also put your comments down below the video, and I'll get to those on tomorrow's show. All right, let's talk about the topic du jour, which is another record broken. Joining us from Kansas City, home of the Kansas City Chiefs, we've got Tillie Allison-Harris joining us today. Tillie, how you doing?
Great, Merlin. Glad to be here, and so glad to have everyone here. I imagine that some of you are in shock and amazement at all the euphoria that we're experiencing today. I went to the UPS, and just it seemed like all around town I had to go return a gift, and everyone's like on cloud nine. And, you know, they say the country is like partially divided, but I don't remember this kind of elation. And, you know what I'm saying? Do you guys feel the same way?
Well, let's just say not everybody's on cloud nine. I'm sure that there are some people who are seriously pissed off right now. But, you know, hopefully, whatever the case may be on the circumstances, we can push that behind us. I did watch a few moments of the inauguration. It was actually pretty interesting. I don't know if you guys got a chance to see it. It was Amanda Gorman gave a really nice speech. Other than that, I was watching him as I walked through the White House. It was kind of this addictive thing. You know, I normally don't care for the presidential inaugurations, but I ended up just kind of watching, and I did enjoy the process. But some great speeches were made today as well. Very positive and uplifting, which is what we need.
I'm just really surprised that there's as much, I guess, you know, this is a very unique environment, you know, dealing with what we've dealt with. And I think people are just so hungry for change that, you know, regardless of political opinion and that, people just tend to be responding because, you know, that change might be the solution.
Yeah, well, I think there's one thing that I know, I'm pretty sure, Tillie, I can almost guarantee you, there's one thing that people don't want any change in whatsoever, and that's market trajectory. I'll bring up that chart here. You guys can see this is the NASDAQ 100 ripping. I mean, we had two monster days back-to-back in the NASDAQ. It looked like we were having just a little bit of a pullback, and all of a sudden, nope, hold my beer. We're ripped to all-time highs in the NASDAQ. You can see the S&P 500 looking the same. Russell 2000, who knows what planet this thing is on. I don't have the Dow futures on here, but here's an interesting little factoid for the world out there. This is the first time that the Dow has made a high on inauguration day going back to 1857. 1850, you're talking 150 years, 160 years, the Dow has not made a high, a new high on inauguration day. Another record-setting one for us. So, yeah, as Ivsy says, bubble mania. Hey, you know what? If you've got a 401k right now, you better not be complaining. There's no reason to complain other than this doesn't make sense why it's going up so much, but who cares? Enjoy the ride.
Yeah, well, that's exactly what I'm talking about, this euphoria. It seems to be just widespread mayhem across many different aspects of life. And I think that's a great topic for today. I want to find out how many of you guys out there that you're long the market in your longer term portfolio, you know, what are you thinking? Are you like 100% stock, you know, kind of what's your allocation? I've got about 20% in money market so that if we do have a correction, you know, any sort of little flash crash or anything, which will bring the market price down, I could then allocate in and get a larger allocation into the stock market. So, you know, just I wanted to get some kind of feedback for what you guys are thinking. I mean, is everybody just like crazy bull, or, you know, is anyone like, how do we protect this? You know, what are you guys' thoughts?
Interesting. I'm curious to see what the chat room says about that one. I think you'll probably get a different pulse in here, Tillie, versus a normal environment, because I think that most of the viewers that watch this show are going to be slightly more active, right? They're not going to be the buy and hold forever, although I'm sure some of them have 401ks and retirement stuff. What's interesting is you were saying that, I was thinking, I'm reflecting on all my different accounts, And none of them right now am I long an index. And I know what you're going to say. You're going to be like, well, that's pretty much what I'm trading. I'm holding S&Ps or Dows or NASDAQs or Russells. I've gone in specifically targeted sectors and companies. For example, I've got a bunch in the cannabis space right now because I'm very bullish on that sector. But I do believe that will rise with the overall market. I just can't bring myself to buy the market with the, what do we say, the emotional baggage I bring to it. Because last year I took a huge losing trade shorting the S&Ps. You guys might remember that one. And my gut still tells me this thing is going to crash, but right now it's not. So I'm just backing off and letting it do what it does.
Exactly. And I think that I know that we have a lot of active traders that, follow the show, and a lot of active traders on the Trading Academy and in the industry. But, many of us also contribute to a plan that's kind of hands off. And I think one of the benefits of participating in plans, employer sponsor plans, where there are, maybe matching contributions or maybe a profit sharing plan where we do nothing. And those allocations are kind of hands off, and it forces people like me. I'm the ultra perma bear. For those of you that don't know, before I say 2003, when I first experienced my first bull market, like hands on. So I tried to start trading in the .com bubble, and I didn't know it was a .com bubble. All I knew is that, hey, the stock market's awesome and you're supposed to buy and you're supposed to make money, and that's it. But what happened is I actually got caught in the crash, and it was, extremely frustrating. I didn't know how to sell short. And that's really what led me to learn about options and futures and other products, is because I got crushed. I got killed. And by 2003, I then, for the first time, remember seeing a market reversal. And, just went from crazy bear market to almost overnight a bull market. And it seemed kind of short-lived, because then by 2007, all of a sudden, everyone started talking about this mortgage lending crisis that was going on.
Right.
They didn't call it a crisis then, but how many of you had neighbors that were, making $25,000, $50,000 a year and buying a $250,000 home, knowing that that's like a red flag for something bad's going to happen. So before that, I was like a total perma bear. So you guys know what a perma bear is, right?
Yeah.
You're just waiting for the next crash all the time, totally negative Nancy. And so what the market has taught me is I am my own worst enemy. And the only way for me to be long the market and not even think about doing anything is to have someone else involved in the management of it, to help me have that more longer term perspective. But then in my other accounts, I can be more active, trade options, trade futures. So kind of having that portfolio where we do have some investments that are allocated to participate in the market long term. We do regular reallocation, so we're not just buy and hold and hoping for the best. But right now, like I mentioned, I have about 20% available to do other things, and then I'll become more defensive as the market does show some signs eventually of a real crash.
So 80% invested, 20% sitting in cash waiting for opportunities.
Roughly 20. I'm going to allocate about half of that this week.
Nice.
So then I only have about 10% probably.
I'll read you some of the responses from the viewers out there. Nick says 25% in safe and the rest is in stocks and ETFs. So great. Yep. Tom is probably the one that I relate to the most here just because of his positions. He says long crypto, long tech with trailing stops. I love that he added the trailing stops in there, guys. And honestly, you should all have some form of trailing stop in here. I can reflect back, since my dad doesn't watch this show. I can throw him under the bus a little bit. But back in the .com crash, my dad, he wanted to buy Applied Materials, AMAT, and he bought it at $80 or so. I think it was $80. And he didn't tell me about it. And then it dropped to 60, dropped to 50, dropped to 40. And at like 30, he's like, hey, what do you think I should do with this thing? And I said, well, you should have been out long time ago. And then it kept on dropping. And I think it went into the teens. And, finally, I bounced up a little bit to like 30 or something. I said, look, I'm tired of you contacting me all the time, asking me what you should do with this thing. You should have gotten it a long time ago. We closed the position. Of course, now it's back towards its peak. Bottom line is, he was in this position for so long. He had a profit at one point and then held it to this colossal loss. And my fear is that many people will fall victim to that if we do get a pretty big sell-off here. So, Tillie wanted to talk, when we asked earlier, when I spoke with her earlier about what topics, she goes, money management in this big market uptrend, and how do we preserve that capital? How do we lock it in? Not saying you have to be a bear and say, hey, market's going to die tomorrow, but what if, right? We always want to have that contingency plan saying, all right, if it drops 3% from here, 5% from here, I'm taking my chips off the table and we'll reallocate later on. I think that's a very prudent thing to do at this moment in time.
Absolutely. So whatever percentage we're long, being able to know that, hey, if the market does roll over fast and we don't have some sort of a trail stop in there or a way to allocate to money market, then people get whacked and they freeze typically. And so knowing that that percentage that we have allocated long right now, that's not in a quote safe, income, whether it be, dividend income, fixed corporate bonds, whatever type of product that during a crash, a lot of the dividend companies and fixed corporate bonds, they structure them so that during a crash they can still pay quote fixed income. That's why they call it that.
Right.
It's a lower rate of return, but at least it's stable. So yeah, being long the market is amazing, and the returns are going to do what no other investment can do in history. So with the market being up 300%, now we're going close to 400%. It's going to be crazy. Since 2008, whoever's been able to be long in the market, I remember, Merlin, you bought a house.
Yeah.
And you really caught that market low. So, whether it's a house or other type of investments, buying in the stock market when things are so cheap and then holding it through that long term and protecting those gains, amazing.
Absolutely is. I'm going to bring up a graphic here. Unfortunately, Tillie, you won't be able to see this one. Sorry about that. There's a gentleman on Twitter you guys might want to check out. His name is Ryan Dietrich, Detrick. He's a CMT, and he always has great charts and just all great stuff, statistics, analysis. And I pulled this from his Twitter feed today, and I just wanted to bring it up. And again, I'm not here to be like, oh, well, Trump sucked, right? That's not the point. The point is just simply showing you what the presidential returns are over the course of time. And I know that a lot of people go, well, Trump this or Obama this or Clinton this. Who cares? Numbers speak volume. And what's interesting is you look at the Dow annualized rate of return, it was pretty darn good under Trump. It was 11.8%. The Dow total return was 56% gain for his administration from 2017 to 2021. And I like that the spreadsheet here because it kind of breaks everything down by president. Of course, I wish that the Bill Clinton era was back because I wouldn't mind a total Dow return of 225%. But, it is what it is. But the numbers are done. Now we can start to add a new name on here and see what happens when Mr. Joseph Biden takes over and how the market responds to that. That said, today we saw some pretty good numbers. I'll bring up a few charts here. We already looked at these, but Nasdaq was up 2.35% today. You had S&P up 1.3%. Russell up Russell was only up 0.8%. So excuse me there. 10-year, we don't worry about that one right now. Crude oil and Bitcoin, we'll worry about Bitcoin later. But the major indexes all rejoicing and doing very, very well with this market move. Now, Tillie, I don't think I've had you on. Have I had you on in January? Were you on yet this year?
No, this is our first show. I've been focusing on some things that I have to do in the industry. So, in our industry that we're in, if we do some things and we're involved with some things, we got to, make sure that we do some compliance stuff. So I've been dealing with some of that. I live in the state of Missouri, and they're a little more strict about, stuff than in Texas. Mm-hmm. So I have to, make sure that I'm in good standing, if you will. So I've been dealing with that.
Nice. All right, so more people put in comments on what they're in. Let's see. Raj says, long SPY until 400. So what, you're going to be in SPY until Thursday? You're going to be in there until tomorrow? I mean, the way this thing's moving, 400 doesn't seem like that far off. What else? Question for Tillie. I think a pullback of 10 to 15% in the S&P by mid-year, but end the year up double digits overall. What's your take on what your thought for S&P for this year?
So far, so good. Very bullish. We've got enough structure in the overall market. If the market were to just shoot up without any basing or demand accumulation, so the reason I like to do these accumulation videos is to show everyone where the buyer stepped in and bought. So if it does come crumbling down, what's going to slow it down? So that's the most important thing, is knowing that on the way up, is it stable? And the S&P has many formations. I think last week's low of 374 on the spiders. It was so cool. I was in class and we put a buy order on Sunday to buy the S&P at 374.5. And then Friday, the order finally got filled. And then it's been ripping ever since, and it hit the target today of 380. So as long as there's enough accumulation demand zones forming on the way up, when it does come down, it won't just melt. There'll be something to slow it down. And so that's good. It looks fantastic. And then, as far as double-digit returns, I think the impact of the stimulus and really if there's any underlying trouble, if that becomes present, how they manage that. But, knowing that the stimulus is really, people are very positive about that. Hopefully, more people go back to work and there's more money flow coming into the market from 401k plans and things. That's something I'm really shocked about, is how the market can be making all-time highs again, and the unemployment rate is where it is, which means that, that so-called 10% of our money. So our money only makes up about 10% of the money flow into all the financial markets, and how that is not even important at all. And the market can be making all-time new highs again with the employment data where it is.
Yeah. Yeah, it is. It is weird. I mean, I'm skeptical on all the data in general. Ever since I interviewed, I can't even remember the gentleman's name, but when I was doing Power Trading Radio, this is probably 6-8 years ago, we interviewed a guy who was from the Bureau of Labor Statistics, former employee, and he says, "Yeah, we cook the books. We tailor the data to fit the administration's objectives." And I went, "Well, how the hell am I supposed to know what is real and what is not real? I'm making investment decisions off of this data, and here you're telling me that you're changing components of things like CPI and PPI to paint a rosier picture or more desperate picture so that you get more stimulus and funding." It's just bizarre. So yes, I don't believe all the data. Bottom line is, it's that price chart, and you look at it here. There's no arguing this, that you should be going long and strong, but I wouldn't buy right now. I'd wait for some pullbacks on it.
Yeah, the S&P. If we pull back to like 380.
Yeah.
We broke out of the 380 area on the spiders. We get a nice pullback to that. I'll take what I can get. So, if we're sitting around waiting for a correction, it might be 6 months or a year, whatever. So that's where having more of an active income approach can be helpful. If you're willing to be a little more active, because waiting for the good pullbacks, and the last one we had last year was the stinking pandemic.
Right.
We haven't had a healthy pullback or correction. I'd really love to see, the heading of the topic today was, I think, an all-time high, but another record high. But, recently on my Facebook page, I posted when bad news is really good news, that we haven't really had any bad news. If the big brokers out there and Wall Street companies want to sell down the market to buy more, then they'll create bad news, and so right now all news is, being taken as good news. The fact that we have a stimulus, that's pretty bad. That you know what I'm saying?
That we need to have it, yeah.
Hello, that pretty much says that we're in trouble, but yet it's being perceived as, oh, we've got a solution to our problem. So the market is behaving extremely euphoria. I think Alan Greenspan would have just, been up there talking and saying this is completely irrational exuberance for the market prices to be doing what they're doing. Yet Wall Street and CNBC and all the professionals out there in the industry are acting like it's kind of normal, which is kind of crazy.
Yeah. I think if Greenspan was, I was going to say if he's alive today, I'm pretty sure he is. He probably had a heart attack watching this move. If he thought irrational exuberance was what happened back in the late 90s or mid to late 90s, then this has got it. He's just speechless over this one.
Absolutely, yes, completely.
Yeah. Nathaniel says, does Miss Harris trade with Total Viewer? You use Total View?
Oh, are you referring to Total View as far as the level, what is that, level 3 Total View is for Market Outlook? No. I only use chart data, and then what I do in my own brain is I tend to average out, prices like a few ticks on the S&P. In my brain, I'll average out that price, and because, whenever we look at the price chart, we're looking at the footprint of what happened in the past. And a lot of times where we want to buy, market won't come exactly there. And, if you're using like this Total View or any kind of other, level book, if you will, if that's what you're referring to. I think
it's NASDAQ Total View, right? If I'm not mistaken, Nathaniel, type it in. But if he's talking about Total View, then I understand. But
any kind of service out there that's looking for order flow, where those orders might be, I've kind of become okay with averaging out prices on a chart. And then I would imagine that's what the Total View or this level is looking for.
Years ago, we actually built out the education on the Trading Academy. Built out the education for Total View, and I'll tell you this: Level 2 gives you an idea of. It used to give you an idea of where all the buying and selling orders are lining up on that screen. And then the interesting thing about Total View or Level 2 is that you used to be able to see an institution's name. So, for example, Goldman Sachs, their ticker symbol is GSCO. It's not a ticker symbol, excuse me. It's an MPID or MMID, Market Maker ID. You would see it on the level 2, and you would see GSCO come in, and all of a sudden he's selling 50,000 shares. Where do you think I'm going to be if Goldman is out there in the market selling 50,000 shares? I'm jumping right in front of him. What happened is so many people were doing this that all of a sudden Goldman realizes, I can't show my name, I can't show my face because people will jump in front of me. They all now use ECNs or electronic communication networks. So What made level 2 work was market makers and being able to see Morgan Stanley, JP Morgan, Goldman Sachs, Merrill Lynch, all these guys. You used to be able to see them. Then all of a sudden they went to ECNs. To make it worse, there's a thing called reserve orders or iceberg orders where I can show you 100 shares and have 50 million behind me that you don't see. The only way you identify that is if you watch the time and sales and prints. Long story short, what that does basically, by them not using their names and using iceberg orders, it makes level 2 screen and total view, I would say 99.9% useless. Unless you're that jackass from New York who has a trading school that says he can spot Goldman Sachs on a level 2 screen and still selling classes, you know who you are. You can't do it. So don't bother. Sorry. Was I overly rude right there? I think I may have been too rude on that one.
No, but I think they package it really nicely and they make it sound like, and the people who use it actually believe that it is showing them something that is a value. You know, it's all psychology. Yeah. So if they believe that they see something that's giving them confirmation, which is what it is, confirmation that there'd be buyers there, like the S&P 374 half. You know, that buy point was identified a week ago. Market came down within, I think $1 range of that. So I think that what that might help people do is in their mind rationalize an area where there would be buyers or sellers and to give them something to work with, and anything that helps someone, analyze the market and take action and calculate risk and reward, whatever tools work. Some people got to use RSIs,
yep.
And stuff for divergence and things to kind of give them like a heads up of, hey, this might happen. Mm-hmm. And I'm really open to that. I'm more of a defensive kind of gal, and I wait for things to visually set up. But, RSIs and things like that give divergences to kind of say, hey, don't get caught in this trap here or that trap there. So anything that helps make a good decision.
Yeah. And Nathaniel commented back, he says, but level 3 data, well, level 3 is institutions. You retail guys, you're not going to have the NASDAQ workstation terminal. That's going to be for the institutions. He says, lets you see the whole book instead of just the top orders. It's not just the top orders. If you have an aggregated book, you can see all the people out there. You can see it's not just aggregated tiers. It's showing you everybody who's out there participating. But again, they're not showing you true size. Okay, so you won't be able to see those reserve orders. I could hide things, and it doesn't get sent to the exchange. It stays on the book, so on the trading firm's book that I'm using. So that won't go through to the exchange. It just exchange sees 100 shares and keeps feeding off of my back inventory of shares out there. So I love what Tillie added right there, which is you have things like RSI, Bollinger Band, stochastics. I was, I would say cockily, one of the better level 2 readers out there. That's what I did from 1998 to about 2001. I lived and just stared at that level 2 screen almost the entire time the market was open, and I was really good at it. Can you use it today to help you identify turning points in the market? I would say yes, but you have to be gifted. I mean, there's something very specific to look for, and it's this. Let's say you have an ECN or any person on that level 2 screen, and you see that they have 100 shares available. And you notice in the time and sales that 100 shares transacted at their price, but they're still there. You now know they have a reserve order. You know that there's more than what they're telling you. If I can line that up with a demand zone, an area on the price chart that looks like there's good supply or demand, whatever the case is, and I can see that somebody has a reserve order there and he's parking himself and saying you're not going to go below or above this line, then that gives me a slight edge. But I don't think it's something that you want to spend all of your time looking for. It's just not worth it. And there's so many other things that will give you a competitive edge that's better than that. And that's what Tillie teaches in her classes is it's supply and demand methodology. It's looking at the way that levels are formed and saying, okay, I can see by the way it's built that there's most likely somebody here who's got big orders or will be brought back into the market at this price level because of those big orders.
Yeah, tape reading has been around forever. Tape reading is what Charles Dow did in the 1800s when companies started trading on the New York Stock Exchange, which before was Broad Street, where they did a lot of agricultural farming trade. And he hired guys and gals to read the tape, the paper tape from the 1800s, when things were written down on a book. They seriously read the tape for miles and miles down New York City until their fingers bled. And they were looking for accumulation, distribution, demand, supply to find out where there would be likely a good buy. And so what companies have done out there today is they have created products and they try to market to the retail public to try to give them an idea of where those orders might be. But, think about it. If Goldman Sachs knows that these companies are out there doing that, they're going to make darn sure that they they use a lot of algorithms to slice and dice up their orders so tiny that no other software could ever pick it up. And the guys that developed that stuff are like really crazy smart from MIT, and they're working for Goldman Sachs, not the guys that are developing the software to sell some level something to somebody.
Absolutely. And unfortunately for Nathaniel and others out there, I would love to show you guys this stuff, but I can't because the market's closed. So, if I was to do it, maybe I'll record a video or do a special one-off session during regular market hours where we can look at the level 2 screen. I don't even think I pay for level 2 data feeds anymore, to be honest. But I can get an account that has one, and I can show you that ability to spot these guys out there. But it's really hard to do. I mean, you really have to know what you're doing, and I think it's just kind of a waste of time. Brendan says,
what's that? Funny story here. For those of you who've been trading for a long time, even a decade ago, if you were using something called the Dome, it would show orders coming in for like 20 or 30, we call them strikes price, away from price, like round dollars. So if you could go, $20, $30 out of the money and look at all the orders, that's kind of helpful because you can see rhythm there. Well, they cut that. Like most platforms out there only show like $10 out of the money activity, and then everything else has been taken off. And then those computers out there are selling other services to try to, show where some of that is. But I think you're going to find more reliability learning to use price charts. Like the market last week was holding above, prices that. The only reason it stays above price is because somebody wants to buy. And then when it pulls back, those buyers get filled and then it rips like it has done. And so there's a lot of studies on price action that does reveal, the sentiment and the strength of where to buy and where to sell.
The beauties of technology and computers helping us out in this process. All right, let me, I want to talk about a couple other things. What do you want to say? Are you in front of some charts?
I am, and I have questions. Anyone trade crypto ETFs? Some of the blockchain ETFs, a friend of mine was asking me questions about that. Do you have experience with any of those blockchain ETFs?
I don't. When they first came out, they were very, very illiquid. Let me see if I can. This is one of the ones I remember. The BLOK was one of the ticker symbols. Let me add on some watermarks here so you guys can see the names and ticker symbols. But I don't trade the ETFs. I think that they're a good venue if you don't want to spend the time and resources to look and see, what's going on with the technology. Just, buy the ETF and call it a day. But you notice here that really since December, these things, before December of last year, these ETFs weren't really doing much. This is the block one, but there's also several others here. The volume is very, very low still. I personally would much rather buy into the crypto space by, opening up a Coinbase account or Binance or something and actually go out and buy the projects that I think are best. Now, that most of these blockchain ETFs or crypto ETFs, what they're doing is they're not really buying crypto projects, Tillie. They're not going out and buying, let's say, Ripple or Ethereum or Litecoin. They're going out and they're buying Microsoft because Microsoft's working on a blockchain. They're going out and they're buying IBM because IBM is doing smart contracts and blockchain programming. So it's kind of, if you look at the holdings of a lot of these crypto per se ETFs, they're not really crypto. They're big, the big bellwether companies. Now, what you could be doing is something like we talked about GBTC, which is Bitcoin. It's a Bitcoin trust, right? And I'll bring the chart up here. This is one way that many of the viewers here have gotten their feet in the door, and I think that's actually a pretty good thing. GBTC. What this is it's a trust that literally buys physical Bitcoin and holds it into account, and basically this is supposed to be 1/1000th of a Bitcoin. So it's at $35 right now. That means that they're pricing Bitcoin to be $35,000. There's a little bit of a disconnect there. You're paying a premium to buy GBTC. That said, it is a way for you to get in there and buy into the crypto movement. Grayscale was going to also do one on Ethereum and Ripple, but the Ripple has now been shelved. They're not going to do that now because of the security issues. But to me, this is probably the only way I would say to buy into crypto on the exchanges, other than futures markets. Other than that, Tillie, those ETFs that you're mentioning, they're not really crypto. They're not looking at crypto projects, just the big companies. It's
more about the technology that other companies are using in this industry. Okay, I get you.
Yep.
Yeah, that's one thing that, the friend that was asking me, he's not really experienced in, the crypto markets and stuff. And he says, well, is there something I can trade for my Fidelity account or whatever that would participate in the market. And I said, well, I don't know, but we'll ask Merlin.
Yeah, GBTC is probably the best for that. I think that Grayscale, the company that makes this trust, they're trying to expand their product line and get into more of them. But what you'll see here this year, there's two things to pay attention to this year. One's called BACKT, BAKKT. That is going to have I believe they have it right now, a suitor, if you will, which is going to be a SPAC. And this SPAC is going to come in and buy BAKKT and bring them public. And they're going to be a crypto exchange. You also have Coinbase, which is going to do a traditional IPO process. Both of those are going to be happening this year. So to me, that would probably be the better way to play it. But you can't get caught up in that hype. I think when it comes out, these will be the most talked about things on CNBC, Bloomberg, Fox. It'll be nuts. Let the dust settle a little bit, wait for it to pull back a little bit, and then buy in if you feel like that's a sector you want to be into. But that for me would be a better way to do it, not these blockchain ETFs. Right
on. Yeah, there's also I think a stock out there called Riot.
Yeah.
That was a lot of fun. We traded last week in class, and I always love when a student he asks questions. He's like, can we trade this? And what I really love about core strategy is if there's enough volume and pretty tight spreads, we can analyze it, use a 6-step process, place the trade and make a couple bucks. And that's really where I love teaching core strategy, because you got, this guy, he's a college kid, just out of high school. And his dad brought him to the academy because he's like, I don't want to, send him to college. He doesn't know what he wants to study, but the kid loves money.
Right.
And he's on to, the crypto stuff and all that. And he was a really great student, very disciplined. They got all caught up on all their homework real quick, so I love that. But, I love it when we can apply core to any market out there, as long as there's tight spreads and good solid movement.
Yeah, and this Riot one that you mentioned, Riot blockchain, you can see there the volume, it has pretty significant volume. And really since November of last year is when it really started to surge, not only in price but in volume. You're looking at an average of about 26, 28 million shares traded per day. Great. I do believe Riot is crypto miners. And again, there are several mining companies out there. Not really for me, as I think you're going to see a push away from mining into proof of stake. So we could get into the weeds here, but that's proof of work. Is mining proof of stake would be something different that doesn't require all the infrastructure, which could hurt companies like Riot. Raj says MSTR. Well, to be honest, MSTR is not a crypto company. I really want to make that very clear. They're a computer consult or a digital consulting firm. But what makes them a crypto per se is they own so much. They, instead of holding cash in their balance sheets, MicroStrategy, MSTR, I believe right now is holding close to $2 billion worth of cryptocurrency. I think their average Bitcoin price buying is $15,000 and they bought $1.5 billion. So technically, they're probably closer to $4 billion in crypto. So they're kind of sensitive to the price movement of Bitcoin given all their holdings. All right. So Tillie, in that last part, we've gone through so many things. So for your outlook for this year on the S&P, are you bullish or bearish?
I'm crazy bullish.
Okay.
Yeah. So if we get a pullback, to 380 on the spiders where, we have a holiday, so that's kind of tricky there. But usually a weekend gap, if there's a pullback there and those orders are filled, that can be a pretty solid place to look for another rally. And then, I'm keeping my eyes open. If we crack, I would say the only thing I'd be looking for long term, and I'm looking like on a weekly chart or a daily chart, 4-hour chart, as long as we're trading above 3,500, the S&P, that's pretty bullish. I mean, the market can always have correction.
Sure.
And there's plenty of structure down lower that if we do have a catalyst, if some terrible thing happens with these vaccines or another strain of the virus or whatever, who knows, whatever, with the good typically comes the bad. So with all this good, then when the bad comes along, it's going to be real bad.
Yeah.
So whenever it starts getting ugly and nasty and everything is like, oh, I told you it was coming, I mean, it's going to be like totally manic. They're going to go from like crazy euphoria, like, oh, it's no big deal, to like, oh my gosh, it's awful, it's the worst it's ever been. And so as long as the market stays above 3,500, that would be very, very bullish. But the market even, pull back. I know it's crazy, but the market could drop significantly off of these highs. The market is up like 400% from 2009.
Yeah.
And isn't it nice to know that banks have passed all their stress tests? So if the market drops 40%, they won't need any help from the Fed. Isn't that great?
Wow. Yeah.
Yeah.
They won't
Yeah.
need it,
So,
but they're going to get it. You know how they are. They get whatever they want. So,
well, I think that reveals another big problem. What kind of risk is the average investor now taking if Goldman Sachs, Morgan Stanley, and Merrill Lynch can afford a $40 or $50 crash and they won't need help? And everyone knows anything, they're going to short all the way down anyway. But what does that say about, the Fed's ability to step in and stop a crash?
right.
If the Fed doesn't need to step in and stop a crash because the banks can pay their bills, then what's going to stop it?
Right. Yeah, no, I agree. Well, at this point, I'm bullish on it too. I'm basically bullish until it doesn't go up anymore. And the crash is coming. There's going to be a meltdown from all this crazy spending. And you look at these market returns, guys, it's coming on the heels of more money being spent in the history of mankind directly into our financial market. So obviously that's going to keep pushing things up. Tell me about your schedule. You got some upcoming classes going on. Are you doing online stuff yet?
I'd love to, but I haven't been asked to do any online stuff. So I'm doing things here in the center in Kansas City. We have a workshop today. We have a graduate, kind of what they call, they usually call them a meetup. It's kind of like that, but it's specifically for the software that students use. So they come for like a help session.
Uh-huh.
And then we have class starting in February. So we are having in-person classes, and I'm really excited because we now have people wanting to come to workshops again.
Yay.
And there's nothing like having someone walk through the door that's never heard of, shorting or how to manage their portfolio. And just to see the light bulb go off and get people so excited that they can actually manage their portfolio. So, yeah, good things are coming.
Yeah, absolutely. Cool. Upcoming classes, what's your next class?
We have class February the 6th here in Kansas City.
All right, cool. Let's look at two charts here real quick since they came in. I want you to look at Square and Qualcomm. Visali sent this one in a little bit ago. SQ is the ticker symbol for the first one, and QCOM is the second one. I'll bring them up on the charts. Let's start with Square. Obviously, I'm bullish on Square. I love Square because they've embraced crypto early on, and I think that they're doing a yeoman's job. But you look at this price chart here, Tillie. Since March of last year, when it was trading down at a low of about $32, it has rallied up to over $240. What's your take?
Well, it looks very sideways. So
sideways.
Off of the highs of January the 8th, and then previously in December. So it looks like it's consolidating, and if it does break above those highs again, expectations for it to rally another, from the low of 160 up to 240. So you're looking at, almost $100 potential. So if it does break those highs again, and if it can do what it did before. So I don't know enough about the company itself, but, typically if a company keeps doing what it did, if it rallied from 160 to 240, $80, then it has the potential to do that again. So once it does break those highs, could be very, very bullish.
Yeah.
If it does break those highs.
Yeah, the pattern right now does look good. So I drew a little yellow box around that area that Tillie said it's going sideways. Obviously, I was kind of joking because you look at the lows from 2020. I mean, what rate of return was that? I would definitely not call this overall move sideways, but just the most recent stuff. It's up 655% in 299 days. Not quite sideways, but anyway, I like the formation of it. I like the company. I like the structure of the area right now. But I think Tillie's right. That yellow box for me would be no man's land right now. Just leave it alone until either it gets above that, unless you're thinking about buying the bottom of that range, or shorting once it breaks below it. That's the first one. Qualcomm. I'm glad you brought up Qualcomm because I see a shooting star that I'm almost salivating over on today's final close at 164.60. Good looking chart as well. Got some unfilled gaps.
I almost forgot the ticker symbol, QCOM.
Yep.
QCOM, which
Correct,
I have not probably typed in a long
right?
time.
Last time I traded Qualcomm, Tillie.
What, 2005?
Yeah, last time I traded Qualcomm, it was 1999, and I literally saw a guy blow his entire account in 2 days shorting Qualcomm as it rallied like 100 points intraday. He was shorting it, took it home overnight, and basically never saw the guy again. Felt bad for him, but hey, you know what? Don't short something that ran up 100 points intraday. That's just wrong.
Yeah, that and CLAC, KLAC. Like they made the semiconductors, like CLAC, like they always say it was brains of the exchange.
Yep. Oh yeah, I know CLAC. Technically, I think we got a very similar picture here, although Qualcomm technically looks. It does look bullish, right?
Yeah, very bullish. It's just off of the highs, but very, very bullish. The most recent high here that just happened, on the 20th, yesterday?
Yep.
But today. So made an all-time high. I don't know about all-time, but yearly high. It's very, very bullish. Highs and lows, very, very strong.
I'm drawing since this is a formation I like to look at, guys. This is actually considered a gravestone doji. It's not just a doji; it's a gravestone doji. Very bearish sign. The only thing I don't like about this is if the volume on the right-hand side is lower than average. So you have a shooting star here, which some will call a dragon or a gravestone doji. I would love to see that with much higher volume than, as Brendan says, you're going to short it. I will keep an eye on this one. If I can get it to open above 164.44 and then start to break down below it, I'll be thinking about shorting that one. I think that's actually got a nice trade potential set up there. So I like that one.
Yeah. So I got to go and help. We're having a workshop here today. So
okay.
I'm going to it's so great to see you guys. Have a great week. What are we on? Is it Wednesday?
Who knows what day? Yes, it's Wednesday. Good luck to your Chiefs this weekend. I actually, obviously I hate the Chiefs because you guys beat my Niners, gave you guys the Super Bowl, but I all the best to Patrick Mahomes. I hope he ends up being okay for you guys. He's a great young player.
Yeah, that's the only downfall of playing, professional sports is we love the game, but geez, yeah.
Yeah.
Okay.
All right, Tillie, have a great day. Thanks so much for coming on, and I'll look forward to your chart of the week here, or your market outlook coming up soon.
Awesome.
All right, take care.
Guys.
Bye-bye. All right, guys, that was Tillie Allison-Harris. She's out in Kansas City doing a workshop today, so she's got to run. What time is it? Holy cow, she's got to be in there in just a couple minutes. So glad she could join us. I hope you guys enjoyed Tillie. She will be teaching out in Kansas City. We're trying to get her to do some online stuff, but you may have noticed that the market outlook that she was doing every week, she's scaled back to once every 2 weeks because she's getting some certification in the financial markets, right? Some more certifications. She's got all kinds of acronyms and credentials to her name, but as she's a voracious learner, she's out there doing more stuff, so she said her time's a bit more constrained. So I apologize for that, but it'll be about once every 2 weeks we'll have her market outlook on my page. All right, let's see. There was some other stuff that came out for me. Oh boy. There was something from Brendan. Brendan, what did you ask? Okay, Merlin, what do you think then about the future of Bitcoin, proof of stake versus proof of work? Okay, so I'm going to geek out on you guys for just a second here. For those that don't understand crypto, this is probably going to be way, way over your head. I will try my best to keep it easy to understand. The backbone, that what makes Bitcoin work is its decentralized nature. It's a trustless system. We say trustless because think of any other place where you're keeping your money, your bank accounts, your password. That's a trust system. You are trusting that entity or organization to keep your data safe. So anybody with a Wells Fargo account, that's a trust-based system. You trust that your numbers are going to be right, that your money is safe, and all that. Your insurance companies, etc. DMV even is a trust-based agency. I know. Sorry to bring up bad words like the Department of Motor Vehicles. In a trustless system, you don't have to worry about the structure because itself is holding, the network itself is holding everybody accountable. So you don't have to worry about them not being trustworthy. Now, how does that happen? Well, instead of having one location where all the data is kept, Bitcoin works by anybody who's running a computer. This has the program, the software, can be a node, basically one point of data collection in this gigantic web of tens of thousands of computers around the world. So let's say there's 50,000 computers around the world all running a Bitcoin node. Every one of those computers is going to have a copy of the Bitcoin ledger, and they're validating transactions. Because it's so big and every one of those computers is using computing power, it takes a lot of drain on their computers as well as energy, right? They're using a lot of energy for it. Bitcoin, there was some statistic that was saying that the Bitcoin network required as much energy to power it in 1 year as like the entire country of Denmark or Norway or something like that. Some crazily absurd number. But what happens is, instead of using your standard computer, you go out and you buy a high-end video card, right? Something that has a lot of hashing power. That's what you really need to solve this problem. Now, what is the problem? The problem is there's a cryptographic function that every 10 minutes, all these computers, these 50,000 plus around the world, I'm using 50,000 as an example. I think there's probably closer to 15,000. But anyway, these computers are trying to solve a complex mathematical puzzle. the more hashing power they have, the easier that problem is to solve. So what happens is, instead of me having a single computer, standard, normal computer, I'm going out and I'm buying a high-end video card, or 5 or 6 or 10 high-end video cards, which are extremely energy consuming, but that gives me a competitive advantage to solve this problem on the Bitcoin blockchain. When I solve that problem, if I solve it first, I am rewarded. I'm given literally free Bitcoin. It's called emission. It's actually called inflation, as they are releasing and creating new minting of Bitcoin. That's called proof of work, where every computer, every node is trying to solve this puzzle. Miners are those people. And there's warehouses the size of Costco with these, they're called ant miners. It's a little block, and the sole purpose of that machine is to have a high hash rate and solve this proof of work. Proof of stake says, you know what? That proof of work system is so energy consuming that we want to do something different. It's proof of stake is saying, as a stakeholder, I can put, let's say, 35 Ethereum into this account, and now I have a stake in it. And I can be a validator of transactions. And I'm putting my money where my mouth is, literally. And there's thousands of people around the world doing this. So that network, again, very similar to Bitcoin, they are validating transactions. And if one of those, let's say that I was a nefarious person, and I had an Ethereum node, and I decided to put fake transactions in the system. If the rest of the network catches it, which they will because it's 1 against thousands, then I automatically would lose my stake. So my money that I'm putting up, as it's almost like a bond, could get taken away from me. So proof of work is still a trustless system. It's just the way that the blocks of data are solved. I know it's a bit confusing, and of course there's a lot of other little details to that. But anyway, I wanted to go into that. So how do I think it's going to impact Bitcoin? I don't think it will, because Bitcoin will probably never switch from that. You might get some forks, some spin-offs like Bitcoin Cash or something else that decides to go to proof of work or proof of stake because it's better for the environment, right? Proof of stake, I believe, is a safer methodology. I think Bitcoin, not proof of stake, proof of work is a better methodology. It's harder to hack that unless you have more hashing power than 50% of the network. But I think what you'll see is, as new products come on board, they're probably going to gravitate more towards proof of stake because it's simpler and less resource intensive. Thanks, Chris. It's a tough one. I would love to talk more about it. It's a very interesting topic. There's so many different technologies out there, and I think Brendan was actually asking me about one. What was it? H-graph? What was that one? What was that one that you asked me about earlier? I didn't, and it's funny because Brendan was in here. You asked me on the show, and I looked at the project. I really liked it, but I did not buy Polkadot. And it's funny because when I closed up my Ripple the other day, I looked at Polkadot and it was like $7. I went, you know what? I should buy some Polkadot. I should grab a few $1,000s worth. And I'm looking at it now going, man, you snooze, you lose. This is the one that Brendan was talking about, and I'll bring the chart up here. This one's up 44% on the day, but these things are gaining. This is a hash graph, which is similar to an acyclic graph that I mentioned. It's just a different type of chain. It's not even really a chain. It's a computational or mathematical formula that is very unique out there, and I think that people are looking at this as a potential alternative to proof of work, proof of stake. But here's the other one, DOT. Polkadot was a very interesting project that Brendan actually brought my attention to, and unfortunately I did not buy it. It's up to $17. Look at the... I can tell you when I was looking at it, it was right here. It was the beginning of the year, January. I was like, oh yeah, I'll pick up some of that. It was $7 and change, and all of a sudden now it hit almost $20. Oh, the beauty of cryptocurrencies, guys. Shoulda, coulda, woulda is something that means absolutely nothing in our trading and investing world. All right, let me go to your economic or your economic calendars. Now, unfortunately, I didn't have time to prep everything for you guys today. Normally, I have it all set and ready to go. Unfortunately, I didn't have that today. I've been just busy working on a bunch of projects. So I'll tell you what's happening for... I'll just bring it up for you guys. Let's see. What do we got? Thursday, you actually you have the rate announcement from Japan happening tonight, tentative, but my guess is that will probably get pushed back. You have a main refinance rate for the European Union tomorrow. Now, of course, if you're anybody who's been trading the euro, been watching that one recently, it has been how do we say it? It's been, I would say, flat, but in the grand scheme of things, let me just bring up that chart. Here's your euro. It's been rather flat. I mean, obviously selling off over the past couple of weeks, but I think there will be some volatility added on their the policy statement. Not necessarily the rate, which is expected to stay at 0, but the statement that the EU is going to be putting out tomorrow. And that's going to be 7:45 in the morning, California. No, I believe that's actually coming out earlier. One second, let me change. Somehow this got changed to a different time zone. So I believe, yes. That's going to come out in the afternoon. Real quick. I had to update my browser here. Main refinance rate is at 4:45. So that's going to be before the U.S. equity markets open. That's what I thought. Just looked kind of weird there. So the 4:45 in the morning, that's when the statement and the rate number comes out. But it's what the ECB says about it. It's what do they feel about their rates going forward. Are they going to go negative? Are they going to start to raise? It's the talk track is what will be important in that one. Other than that, we have for the U.S. Philly Fed Manufacturing Index. You also have building permits, housing starts, and that's pretty much it for the major stuff happening on the economic front tomorrow. Now, we did have, obviously, Netflix earnings. I was surprised to see Netflix rally as much as they did. I'll bring that one up. I actually bought one put today. The prices were so expensive on the puts. I was like, I don't really want to, but I just bought one. I bought, I think I bought April. I know I made a few transactions today, but April's the one I bought. So let me see NFLX for you guys so you can see what happened out there with Netflix. There is your day on Netflix. And we had that one particular option trade, which unfortunately went against the guy. That's gonna be a rough one. But you know, it happens. I actually thought you were in a really good spot. Look at the volume. Average volume on Netflix is about 4.7 million shares per day. Traded 31 million shares today. Just a huge day for Netflix. And really, their numbers didn't look that great. It was the 200 million subscribers number that just has everybody just minds blown on that one. Earnings for tomorrow. You have Intel, IBM, Intuitive Surgical. Actually, let's just do this. You have INTC. I'll bring them all up as we see. Here's your daily for Intel. You have Intel reporting, that's aftermarket close. You have International Business Machine as well as, and this is actually a pretty decent looking chart. You talk about an ascending triangle building strength. IBM actually looks like it's getting stronger and stronger. ISRG, that'll be a real volatile one. It's a very pricey stock, so and not heavy volume, so be careful with that one if you're trading it. CSX is another one. Transportation coming out with earnings tomorrow. Great uptrend intact on that one. And then I'll leave it at UNP, which is Union Pacific. Again, they're also looking fantastic. And let's be honest, there really is nothing that's looking ugly and beaten up. I mean, it's just so rare to see something that's not looking great right now on all these price charts. All right, what else do I got? Brendan says Dixie could pop up to 94 easily. Sure. I mean, it had such an ugly sell-off. It came down to demand. Now, it's still got a ways to go because you're only at 90.47. Now, you said 94 be your target. Yeah, I think there's a nice supply zone right at 94 on the dot. But we established some other ones along the way down here. You notice there's one right around 93. Perfectly to the dot. 92. Guys, you guys notice the whole number psychology here? I mean, every time it gets to this whole number, you can see like there's an area where it just rips down from. Let's see if 91 works. Might as well keep the train rolling here. Ha, interesting. So whole number psychology, checking out that one. It looks great. To the downside, it could pop. The only thing that I see that's real positive for this one is we're starting to rally back up here. If we get down below these lows that established a couple weeks ago, right around 89, then the downtrend's still intact. But at least this bounce up over the past 2 weeks has been rather positive, right? It's not sinking to new lows. It's stabilized a little bit. What else do I have here? Stocks are overdue for a 10% breather. 100% agree. I'm not even going to say 99%. 100%. Okay, let's see. Merlin, so if the trend is to become greener and these computers are hashing and requiring more energy, don't we need more energy generating power and generation power? Sure, of course we do. But again, I think what you'll see are projects that are starting up, because Ethereum right now is proof of stake, or I keep getting mixed up. Ethereum is proof of work, right? They're modeled the same way, but they're transitioning right now to proof of stake. When that happens, there's going to be a lot of computational computers that are just sitting there going, well, what do we do now? Because a lot of these mining rigs, they're customized, they're tweaked and tailored for a specific blockchain, whether that's Bitcoin, Litecoin, Ethereum. To me, that would be the challenge here, is where all those are going to go offline and have to be retooled or repurposed. And where are they going to go? They'll probably go to somebody like Bitcoin, as I think more projects will probably start to move to proof of stake. All right, last one. I don't know, Stephanie Kelton, Austrian Hispanic, says, thoughts on Sky. All right, well, let's check out Sky. What time is it? Holy cow. You guys are, you did Larry, or did Big Eb tell you to ask me questions so I stay on the program for a full hour? It looks beautiful, right? Skyline, this is a great chart. I mean, again, this is the similar pattern we're seeing with everything. Now, it's not all-time high, so you have a pretty big challenge here coming up, which is going to be this this previous high that we established back in 2020. No, higher up than that. I'll put it right here as the number I see, right around 36. Let me go to a weekly and see what if there's anything else. How about a monthly? Okay, so you've got obviously some issues with Skyline. I don't know the story. Maybe they were a SPAC. Maybe they got reverse mergered. But whatever the case is, you see some crazy swings on this monthly from basically $36 down to about 12 or 15. Seems to be the pretty common thing. Trend-wise, I love the daily. It makes me a little bit nervous because of where we're headed. You're going right into overhead supply right around 36. So that would be the challenge that I would see on this one, and I'd probably say be careful on that $36 mark. But otherwise, trend looks good, and it's the same thing for most markets right now. Just do you want to be chasing something or wait for the pullback? That's the big challenge. Okay, let's see. All right, cool. I think that's going to do it for me for today. I don't have a guest for tomorrow's show, so we'll leave it at that. Who knows? I may have a guest. I may not. Of course, you guys can always influence the talk track and the show as you normally do. Feel free to email me. You can just email me. My name is on the screen right there. It's TraderMerlin@gmail.com, or you can go to TraderMerlin.com, or simply put your comments down below the video. If you want to see Tillie Allison in action, you have to go out to Kansas City to see her teach. She will be doing the market outlook for me, I think, this weekend, since it's been 2 weeks. But otherwise, that will do it for Tillie and I. Hopefully you guys enjoyed today's show. If you didn't, let me know why, or what we can do to improve it. You can do that again at TraderMerlin@gmail.com. Until then, happy trading, everybody. I'll see you guys tomorrow.